Investment accounts are just like bank accounts. They are designed for different purposes. Your checking account is designed for day-to-day banking because the transaction fees are very low, but the interest rate is also very low, so you don't put your savings in your checking account. You put your savings in a savings account or a high interest savings account so you can earn more interest, but those accounts have high transaction fees, so you don't use them for daily transactions. You have two accounts for two different purposes. Investing is the exact same way. Your tax-free savings account, or your TFSA, is designed to give you tax-free growth, meaning that you want to invest primarily into high growth assets and companies and stocks so that you don't have to pay taxes as they grow. The RRSP is specifically designed for retirement and gives you an advantage on American dividends, so you might want to tailor your investments specifically for retirement, maybe a little bit more long-term focused. The First Home Savings Account is specifically designed to help you purchase your first home, and so the growth in that account is tax-free and you get a tax deduction when you put money into that account, but you can only withdraw money from that account for the purchase of a qualified first home unless you want to pay some penalties on it. And so when it comes to choosing an investment account, it is just like choosing a bank account. You need to figure out what you actually need and then choose the best account for you. Now, within all of those accounts, all of them can basically invest into the exact same thing. It's almost any publicly traded asset. So think ETFs, think stocks, think bonds, think basically anything that a normal person would actually want to invest into. It's not going to give you any super risky, any private equity, stuff like that, but you can invest basically into anything, almost anything in all of those accounts. What you need to do though is figure out which account is going to fit your long-term goal. If you need to access the cash in the next, let's call it up to 20 years, you probably want to use the TFSA. If you're using the money to purchase your first home, the First Home Savings Account is best. And if this money is going towards long-term retirement, the RRSP is probably best, but you need to speak to a professional. Thanks so much. Hope this video helps. See you later.